Hello everyone, welcome to today's backtest, and our backtest is going to be on 11th of February, that's on Wednesday. So on my last video, I said my major draw on liquidity would be price rallying up to this inefficiency, okay, after working its way to February fair value gap, the first presented fair value gap created on February for this month. And also I said I would want price to rally down into this new week open gap right here before trading up to the inefficiency. And my current draw on liquidity will be this buy side right here, buy side liquidity before trading up to February first presented fair value gap and into this inefficiency. Now down to Wednesday, 11th of February. Okay, now you can see in my results. Okay, so this is 11th, and you can see this drop down in price right here. This all happened during the New York AM session. You can see the drop down in price into the new week open gap. These are the new week open gap looks. Friday's close and market reopens on Sunday. That's the whole story for the new week open gap. And like I was saying, you can see this drop down in price into the new week open gap. Okay, I expected this drop on Tuesday, but I talked about this. But I talked about price taking out this high, creating a fair value gap. I think on the 15-minute time frame. But there's also one on the 5-minute time frame. Price trading into it and traded down. Okay, I expected this drop down in price into the new week open gap at this time. We didn't happen on that day, but it's finally traded down into the new week open gap. Like I said, the new week open gap acts like black hole. It acts like a black hole, just like the way black hole sucks things in. Okay, that's how when price trades to that direction, you can see how it's traded down with displacement into the new week open gap, like it's sucking it in. So I'm not surprised by this movement. Like this is something I've seen, I've done backtest on a lot of times, and I've seen it live a lot of time. Our price rallies down or rallies up into new week open gap and new day open gaps. Now this day was NFP Wednesday, and this drop down in price started immediately after the news release, the NFP news release. Now I'm going to show you how that looks on my Forex factory. This is it, Wednesday, February 11th. You can see average hour earnings, NFP, non-farm employment change, and employment rates. I know some of you are like, but this news was released at 2:30 p.m. Okay, so this is actually Nigerian time. So our 2:30 p.m. right here in the afternoon in Nigeria time is 8:30 a.m. in the USA. So that explains the time difference. Okay, at 2:30 right here, at 2 o'clock, 2 p.m., it's 8 a.m. over there. Like I always said, that's more reason you need to set your time zone to New York, like I did on mine. So let's mark out 8:30 on our charts. That was when the news for NFP was released. And I made a mistake. The drop down didn't start after 8:30. It started after 9:30. That's the market open. Okay. So the news was released during 8:30. So after the news release at 8:30, you can see price started rallying up. Okay, all this was a shoulder swing. This movement right here was forced, okay, to trick traders to think price is bullish for this day. Meanwhile, you can see how it took out this high later on at 9:30 and rallied down with speed into the new week open gap. So traders who are reactive, okay, with price movement and stuff, okay, when they see something like this, okay, after the news release, and traders who trade during news, high impact news release hour, once they see a move like this, they are going to react to price and probably they are going to buy. And there will be other traders who buy the breakout of this high right here, thinking price is bullish, okay, and see how the market is going to trap them in, okay, and go down and see how it trades down into the new week open gap. And also traders who must have bought this price, okay, thinking price was bullish, their stop losses, let me make this black. Their stop losses will probably be at this low. I'll make it red, so you frame that for stop loss. This low, and some traders who may probably have been long from the start of this move, okay, their stop loss will be at this low. There are so many lows right here, and okay, this low. There's also a low here. Resting below these lows are stops, okay, sell stops. And you see how price takes out all these lows, displacement. And some traders who do not set stop loss on their trades, maybe going long at these breakouts, their accounts will be blown while price trades down into this new week open gap. So these are ruthless the market can be, okay, at times like this, to those who are ignorant to the price action. Let me take this off. So from a smaller time frame, let's look at the move down, okay, after price took out this high right here. Let's look at the move down into the new week open gap. This is a 1 minute time frame, and this was the news release. Okay, you can see price creating higher lows, okay, tricking traders to believe price is bullish. Then at 9:30 at the market open, price traded above this high. So some traders are going to see this as a breakout. Maybe they see this as an order block to go long in price. Meanwhile, price is trying to go short way down into the new week open gap. See this down close candle, followed by this up close candle. Okay, some traders are going to frame this as a bullish order block. It's a bullish order block, but price is not going to use it because price wants to go down. So you can know the information, but if you don't use it right, you're going to be caught off guard. So after price took out this high, and you can see this is on the 1 minute time frame, this is a relative equal high. This one and this one right here, these are relative equal highs. So let's mark up 9:30. Okay, exactly at 9:30, price trading above that high and displacing down. You can see the displacement taking out this low right here, these lows as well. So after displacing down, the market left this fair value gap right here open on the 1 minute time frame. You can see how I gave room for the volume imbalance. So this is the this is the fair value gap created during these displacements in price, which price returned to. And also, what's this? This is Wednesday first presented fair value gap. Like I said, the first presented fair value gap is formed after the markets open. Okay, the first fair value gap formed after the markets open, which is 9:30. So this is 9:30, and this was the first presented fair value gap formed after 9:30, which makes this more powerful and gives a more confirmation that price will likely want to rally up into it before trading down. You can see how price traded precisely into the gap, then before displacing down. It's a long displacement on the 1 minute time frame, like long movement down into the new week open gap. Now this gap right here, let's go to the 5 minute time frame. Okay, you can see this right here, this rectangle extended, this yellow rectangle. This is actually the Tuesday fair value gap. So this is the first presented fair value gap formed on Tuesday. And you can see how price respected it after displacing down. Okay, let's go down to the 1 minute time frame. So it's a good thing more than one first presented fair value gap are visible on the chart. So you are going to see how price makes use of the first presented fair value gaps. So this is the Wednesday first presented fair value gap created on this day, and this is the Tuesday first presented fair value gap. You can see how price respects it. First, why price displays down after taking out this high, it drops into it, respecting it, right? Let me draw a midpoint on this. Okay, you can see price respecting it, not trading below the midpoint, and price rallies up to the Wednesday first presented fair value gap, traded down through the Tuesday first presented fair value gap. Okay, at this point price was using the Tuesday first presented fair value gap as a support, okay, to bounce up into the Wednesday first presented fair value gap. And at this point, since price is bearish, it's going to use the Wednesday first presented fair value gap as a resistance, okay, to trade down into that new week open gap below. And after trading through the Tuesday first presented fair value gap and rallying up into it, price is going to use it as what? As a resistance to trade down further. You see how it respects it, not being able to trade up into this upper quadrant, okay, only staying at this lower quadrant. And you can see just the wick of the candle touching it, not even the body. And then price continues to go down, and finally trading into the new week open gap right here, and also into the Monday first presented fair value gap. You see this yellow extended rectangle. I'm going to show you on the 5 minute time frame. That's the Monday first presented fair value gap. You see it, Monday first presented fair value gap. You can see how price trades into it. Okay, and from that point, why trading into the new week open gap, and from that point price bouncing up from this point. So you see how price respects the first presented fair value gaps also even on this point. This is the Tuesday first presented fair value gap. See how price respects it, use this as a resistance, trade down. See how price respects at this level, trading inside, consolidating at this level. Okay, so all these are not random. Okay, this proves to you that price is actually algorithmic, and the movement in price is not buying or selling pressure. Also, price dropping to the new week open gap at a time like this, what does that tell you? After the news release, so after the news release, they are always going to do their manipulation in price, okay, to catch traders off guard. especially those who are ignorant and those who chase after price or are reactive to price runs. Okay, they're going to catch them off guard, and later on price is going to make its real move, and this was the real move for this day. The price was bearish. So for those of you who still thinks the 1 minute time frame is still noise, I hope you saw how the 1 minute time frame was being used on this day. And also there are so many information which I didn't really talk about. Okay, I only talked about how price made use of the first presented fair value gap. Like on the 1 minute time frame, once you know how to read, if you understand the one minute time frame, there are lots of information, lots of things going on the 1 minute time frame. And I'm not trying to encourage anyone to trade with the 1 minute time frame. No, you must not trade with the 1 minute time frame to be profitable traders. There are some traders who are swing traders. Okay, there are some like me, day traders. So there are some traders who prefer trading with 5 minute time frame, 15 minute time frame, 1 hour time frame. And you've seen me shown this because I prefer the 5 and 15 minute time frame. Though I trade sometimes on the 1 minute time frame, but I prefer the 5 and 15 minute time frame, trading the 5 and 15 minute time frame. But it's also interesting to be able to understand what's going on the 1 minute time frame, to be able to identify this is what price is doing at this particular time. Okay, on the 1 minute time frame. I won't lie, I used to be very scared of the 1 minute time frame because back then when I started learning trading, I was more of a swing trader at first. So I was not even comfortable trading on 15 minutes. I think my lowest time frame then was trading on the 1 hour time frame, the 1 hour chart. But as time goes, you get to know yourself as a trader, okay, which trading style you would likely use to approach the market and all. So whatever time frame you're using, okay, either the higher time frames or lower time frame, you should stick to it as long as you're profitable with it, or even if you're not profitable yet, but you see yourself growing as a trader with that style of trading. So until next time, have a productive week.